Today's highlights. China's financial regulators have struck again, completely blocking the grey entry points into the crypto world.
April 22, 2026, Interministerial Joint Meeting on Illegal Financial Activities.
From the initial classification in 2013, to the heavy crackdown on ICOs in 17, to the 2026 halt of RW stablecoins, many projects have left China.
Once the policy came out, they all fled.
The 2021 sweep of the mining sector sent all Chinese miners running for cover. So, can ordinary Chinese citizens normally hold and trade Bitcoin? Will they end up in jail?
As an individual, holding and trading virtual currency is not prohibited by Chinese law.
How should we interpret legal advice, and how should Chinese people view the crypto world? Once they've thoroughly investigated your background, the relevant authorities will start calling you in for questioning. Monday, April 27th. This is BitcoinTV's Chinese channel. I'm Michael, greeting you from Las Vegas. Our program is broadcast daily in Vietnam, Japan, Korea, Thailand, Spain, and English-speaking regions, featuring local anchors in their native languages. Alright, let's look at the most important 24-hour crypto data you need to know. If you saw our exclusive weekly review for members this morning, Bitcoin is stuck at a very sensitive spot. Look at the funding rates. They've been negative for 19 days. What does that mean? Shorts are still suppressing the market. In the short term, 78,600 is a resistance level. A more critical level is $79,500, where a massive number of short orders are piled up. If the price breaks through, shorts could be liquidated in a chain reaction, pushing the price even higher. Also, let's look at Binance's 30-day realized volatility, which has dropped to around 0.38. That's the lowest level since the beginning of 2026. A volatility z-score of negative 1.07 means what? The market is excessively quiet. So how will the price rise? Simply put, it's a build-up of heavy short positions and low volatility with no clear direction chosen yet. But once a key level is broken, the market movement can easily be amplified. However, with every price increase, you need to check your positions. I know the market is hoping Bitcoin will drop back to the 50,000s or even 40,000s for a perfect entry point, right? But look, stable coins have started flowing back into Binance over the last 2 months. March and April saw a total net inflow of $6 billion, with $3.5 billion in April alone. This shows potential buyers are quietly returning. After a previous net outflow of $7.6 billion, the funds are coming back, meaning some investors are rebuilding their positions. Combined with low volatility, negative funding rates, and decreasing Bitcoin supply on exchanges, these signals suggest the market is consolidating and building momentum. Once these stablecoins convert into actual buying power, the upward breakout momentum is very likely to be amplified. Alright, I just arrived in Las Vegas and saw the shooting incident at the White House press conference on my phone. It immediately turned 32 betting markets on Polymarket related to Trump's speech into no. About $278,000 vanished overnight. More importantly, a political black swan of this magnitude didn't crash Bitcoin's price. As you can see, the price actually rebounded from $77,200 to around $79,000. To put it bluntly, it's not just that the prediction market was hit hard by the sudden event. It's more like a real-world stress test. And what was the result? The betting pool collapsed first, while Bitcoin held firm. Alright, today let's talk about regulation in China. Why China? Even though the crypto world is completely disenchanted with China's regulation. No matter how much China badmouths it, it can no longer affect the price, right? But we still have to talk about it because it's your home country. We need to be crystal clear about how the home country is shifting into reverse, right? On April 22nd, they launched a 3-year all-out campaign against illegal activities. That sounds very familiar, doesn't it? On April 24th, they singled out financial products and online marketing to set new rules. It's a standard move, a campaign-style approach. Even though they lack the tools, they have to keep the rhetoric very high. So this time, the state isn't worried about what coins you're buying. Instead, they're afraid some people will use stable coins, cross-border wealth management, quantitative custody, or new finance as a front to repackage the old P2P script, put it in apps and communities, and fleece people again. Simply put, this time the state is protecting its own retail investors from being harvested by others.
On April 22nd, the plenary enlarged meeting of the Interministerial Joint Meeting on Preventing and Cracking Down on Illegal Financial Activities and the Mobilization and Deployment Meeting for the All-Out Campaign was held in Beijing. The joint meeting decided to launch a 3-year all-out campaign starting in 2026, building on the past 2 years of special actions to consolidate results and achieve normalized, institutionalized, and standardized work.
Although Bitcoin wasn't directly named this time, it imposes clear constraints on peripheral cryptocurrency activities. Specifically, models that use apps, communities, and short videos for traffic, then repackage stablecoins, arbitrage, custody, and copy trading as new financial opportunities will be key targets for cleanup. For retail investors, this means many entry points for the Chinese crypto community will become more dangerous and prone to sudden loss of contact, shutdown, or collapse.
Yesterday, 8 departments, including the People's Bank of China, jointly released the administrative measures for online marketing of financial products. This provides comprehensive regulation for the online marketing of financial products by financial institutions and third-party internet platforms commissioned by them. It clarifies marketing content and codes of conduct and defines the rights, responsibilities, and boundaries between financial institutions and third-party internet platforms.
On April 24th, 8 departments, including the central bank, announced the administrative measures for online marketing of financial products. The core constraint is to reduce the space for exaggerated returns, misleading publicity, and pseudo-financial packaging. In the context of cryptocurrency, the biggest impact isn't on on-chain transactions themselves, but on marketing methods that package crypto products as low threshold, steady returns, professional custody, or cross-border wealth management. For retail investors, what really needs to be guarded against isn't price fluctuations, but these financial packages that look safer but are actually easier to fleece people with.
All right, look, from the regulations in 2016 to 2026, over this decade, China's crypto regulation. First, it crushed crypto exchanges, which made Binance the world's top exchange, right? Then it went after crypto mining. That benefited the US, which now holds nearly 40% of global hash rate and is still growing. So what's next? Web3, cross-border payments, stablecoins, RWA, quant custody, arbitrage, all of these will be classified as disrupting financial order. If you say crypto makes money or Bitcoin will rise, it's a violation. Looking back at 13 years of regulation, it's not about chasing one coin or company. It's about dismantling every pillar of crypto for the Chinese public. They want to tear it down piece by piece. Do you think that's possible?
The first blow came early, and it immediately shut half the door. The 2013 Notice on Preventing Bitcoin Risks first defined Bitcoin as a specific virtual commodity. The message was clear: it's not money, so don't expect a seat at the formal financial table. Banks and payment firms were told to stay away.
Here in Las Vegas, on the eve of the Bitcoin conference, talking about China's regulations feels quite conflicting. Since 2013, while the world and mainstream finance have embraced Bitcoin, even as a strategic reserve, since back in 2013, Bitcoin has really never truly been allowed into China's official, formal financial system. This particular classification was especially crucial because, from that point onward, the entire system essentially shut Bitcoin out of the mainstream.
In 2017, regulators struck again with the Announcement on Preventing Token Issuance Financing Risks. It labeled ICOs as illegal public financing, demanding projects stop, funds be returned, and platforms cease exchanges. The result was immediate. The ICO craze died out, and domestic exchanges and projects began a massive exodus.
Once the policy was enacted, ICOs were banned in China. At its peak, Justin Sun raised 10,000 Bitcoins. After the policy came out, Justin Sun fled the country. He went to the US and then back home since I helped him raise funds. The local retail investors panicked and demanded refunds. Justin Sun refused. After a month, I was at my wit's end. I said, "Justin, if you keep this up, we're all going down with you. Everyone else has refunded, only you haven't." He said, "I'm not refunding. What are you going to do about it?" I said, "Fine, don't blame me for what happens next." Then I leaked Justin Sun's phone number.
After the government cracked down on cryptocurrency exchanges, the year 2021 turned out to be even harsher for the industry. That particular year's sweeping purge of the entire mining sector sent all Chinese miners scrambling, forcing them to run for cover and seek safety elsewhere. Back in 2021, Chinese miners held over 70% of Bitcoin's pricing power. The computing power was all on Chinese soil in Chinese hands. Now, it's all been scattered. I believe no one will ever forget the scene of all those miners fleeing in total disarray back then.
On June 21, 2021, the People's Bank of China met with several banks and payment institutions, making it clear that they must not provide account opening, registration, trading, clearing, settlement, or payment services for virtual currency transactions. This move might look like a technical restriction, but it's essentially about fiat currency inflows and outflows. The result was immediate. Pressure on over-the-counter deposits and withdrawals rose sharply, further decoupling the crypto world from the traditional payment system. The most familiar entry points for retail investors to buy coins were significantly squeezed.
I remember that day was September 24th, 2021. Do you all remember this photo? A Tibetan woman from Garze, Sichuan, grabbing mining machines by their data cables and tossing them onto a truck like trash. The image is beautiful, like flowers, but the context is incredibly bleak. From that day on, not only did it become harder for domestic platforms in China, but for overseas platforms trying to acquire Chinese customers became a high-risk move. So, since September 24th, 21, the Chinese crypto circle has experienced a regressive total clearance style setback. I've always believed that, looking at the course of history, the people who made that decision back then will have to bear historical responsibility.
First, looking at the trading side, the notice on further preventing and handling the risks of virtual currency. Trading speculation clarified that Bitcoin, Ethereum, and Tether do not have the same legal status as fiat currency. Virtual currency-related business activities are classified as illegal financial activities. Even overseas exchanges operating for residents within China were also deemed illegal.
The notice emphasizes once again that virtual currencies like Bitcoin and Ethereum, including so-called stablecoins like Tether, do not have the same legal status as fiat currency and cannot circulate in the market as currency. The notice clearly states that all virtual currency-related businesses, such as virtual currency exchange, are considered illegal financial activities, strictly prohibited, and will be resolutely shut down according to law. Overseas virtual currency exchanges providing services to residents in China via the internet are also considered illegal financial activities.
Now, on the mining side, the notice on rectifying virtual currency mining activities strictly banned new projects, called for a quick exit for existing ones, and banned continuing operations disguised as data centers or the digital economy. Electricity prices, land, taxes, and financial support were all tightened simultaneously. Simply put, that day didn't just suppress trading, it pushed both the trading and production sides of the crypto world in China onto a high-voltage line.
On September 24th, the National Development and Reform Commission's website released the notice on rectifying virtual currency mining activities, strictly banning investment in new projects and classifying virtual currency mining as an industry to be phased out. Strictly limit power applications and energy use for virtual currency mining firms. Ban new mining projects from power connections. No power supply to mining firms under any name. Stop processing all pending power applications. Strictly ban fiscal, tax, and financial support for new virtual currency mining projects.
I remember back in 2021, Elon Musk posted a tweet. He said the Bitcoin hash rate we've been dreaming of is now wandering over to the United States on its own. And China, in 2021 and 2022, the NDRC revised the industrial structure catalog, putting Bitcoin mining in the to-be-eliminated category. From then on, mining wasn't just a target for crackdowns, but was excluded long-term by industrial policy. The result was direct. China handed over the Bitcoin pricing power it once held to the United States. Meanwhile, the electricity the mining industry can't consume is still being wasted, and local governments haven't found a way to absorb this surplus power. In other words, the 2021 regulatory wave didn't just hit trading routes, it dismantled China's core trading and production ends altogether. Well, at the end of the day, what Chinese users care about isn't how the regulations are written, but three more pressing concerns. Can I still buy it in the future? Will I accidentally step on a landmine? Can I safely cash out my money in the end? So for ordinary people, the hardest part isn't understanding Bitcoin, but seeing the real risks behind high returns disguised as stablecoins, RWA, cross-border payments, or various high-tech projects. Let's hear what Chinese legal experts and lawyers have to say about this issue.
What retail investors are most worried about is whether holding and trading coins themselves is actually illegal. More accurately, the law doesn't directly forbid individuals from holding and trading virtual currencies, but that doesn't mean all subsequent relationships are protected. Once it involves joint investments or group buying with friends, many things will immediately become very blurry.
Individually, holding and trading virtual currency is not forbidden by Chinese law. But for example, if you invest in virtual currency with friends, the law won't protect that. It's a natural state that the law doesn't evaluate.
The second question is whether I can still buy through others in the future. The real trouble isn't whether you personally can touch coins, but what platform or person you plan to use for the operation. Because as long as a platform still provides trading services to Chinese users, or someone places orders for you under the guise of proxy trading, custody, or signal following, the risk isn't just about buying right or wrong, but that the entry point itself might be stepping on the red line.
But if you're running an exchange and want to do business with Chinese users, sorry, you can't. If you want to accept a client's entrustment and help them trade coins, the law says, okay, your contractual relationship is invalid.
The third question is the most prone to misjudgment. Is buying and selling USDT normally actually illegal? To be more precise, simple personal trading of USDT, if not for business purposes and without crossing red lines like cross-border exchange or money laundering, usually isn't a crime. But the issue is, that doesn't mean it's safe, and it certainly doesn't mean the law will protect you.
Simple personal trading of USDT not for business purposes if it's just for personal investment, consumption, or other personal use, using legal funds to trade USDT without involving illegal activities like cross-border exchange or money laundering, usually doesn't constitute a crime. However, such transactions are not protected by law. If you encounter fraud or financial loss, it's difficult to seek legal recourse.
I think some of what lawyer you said is quite fair. But the scariest thing now is that I've noticed some lawyers on channels starting to charge consultation fees, harvesting private traffic and selling courses. I want to ask, the documents are right there in black and white, stating it's illegal finance and not permitted. What is there left to consult about? You also have to be very careful about collusion between these lawyers and relevant authorities. Do you think lawyers are always looking out for you? Once they know everything about you, the authorities will come knocking, because the lawyer knows your assets better than you do, and they know exactly what skeletons are in your closet. This is a gray industry chain. So in that magical country, don't easily reveal everything to a lawyer. It's very dangerous. You have to ask yourself one thing. With every Chinese crackdown and every stricter regulation, has the price of crypto actually dropped? From the start of regulation in 2012 until now, has the price gone up or down? Another question. Official documents can be issued at will, but what about the tools? How do you prove this coin belongs to this person? Where are the tools? As long as you don't admit it, who can prove it? As long as you don't hand over your private keys, who can prove it? So in this world, it's always the bold who feast and the timid who starve. Making money is just the monetization of your own insight. Please use the amount of risk you can handle to measure how much effort and capital you should invest in the crypto world. I hope everyone gets the results they want in the world of Bitcoin. In the future, sovereign individuals and decentralized finance will definitely be the trend. All right, that's all for today's program. We don't just want to report the news, we want to break down the logic and key points behind it for you, so you can invest with a bit more peace of mind. The bear market is here, and we thought we should give everyone a little boost. Let's work hard together in the crypto world, so our ideals of sovereign individuals and decentralization can be realized soon. Good luck to everyone. Let's keep grinding. See you tomorrow.